What's good, y'all? This is the second part of our tape reading today, March 14th, 2025. Before we get started, like the video, comment down below, subscribe if you're new, helps the channel, helps me provide you guys with free content. I'm gonna mute the mic for a second, I got a cough. Alright, so if we go to the 15-minute time frame, we inverted this bearish SIBI right here, okay? And as we're doing that, we enter into the 1050, roughly the 1050 1110 macro. We get the signal inversion right here, advanced market structure shift, the close candle close above it. Okay, perfect entry, right? Because it's right where the fair value gap penetrates the advanced market structure shift. Looks like we were moving nicely. We only took 1 point of drawdown. Didn't seem like a very high resistant trade, but maybe we can continue to push up so we don't come back down here. Now, this is going to be our first target here, a 1-to-1 risk to reward. It's going to be our first target if we get there. I'm not going to move our stop because I want to keep us in the trade as much as possible. But hypothetically speaking, if it was a live trade, I would move my stop up to break even as soon as we hit that target one. But it looks like we're pulling back. This is probably going to be a high resistance trade, depending if we touch that advanced market structure shift again. Like I said in the prior video, I didn't really want to use minis for these tape readings because I want to show you how much money you can make with micros and manage your risk and not over leverage, but also show you how much you can make in building your positions with micros. But when you get on the M and Q, they don't show volume imbalances all the time that are on the NASDAQ, and that could really throw you off. That it makes a big difference, believe it or not, because we're working on the 1 minute chart, and we need to see if there's a fair value gap, a proper one. So the NQ is more accurate with that. Looks like this is going to be high resistance. Now, one thing you could do here is you can add into your position. So let's play around a bit and add to the position. Let's see, let's add one right there. Okay, add a position right here, just in case it wants to dip down a little bit. So many points of drawdown we went down. Okay, only 6. I'm not gonna say it's high resistance yet, but it's looking like it wants to be. Yeah, but if it wants to come down further, okay, what we can do is we can add into our position, bring our entry a little bit lower, and add and get a bigger take profit. Now, if this thing does go in our favor, as soon as we hit target one, we're taking 2 contracts off at target one instead of 1 if we get tapped in here. So our original entry was here at the bullish fair value gap that inverted the bearish one. That'd be nice if we just going up. That's nice too. So if you missed the entry here, it looks like this could have been a nice second opportunity to get in. Alright, do we hit our first target? Or is it going to be like that? So like I said in this video, we're going to keep our stop down here just to keep the trade alive, right? But hypothetically, we're going to pretend and see what happens when I move this imaginary red stop up to certain points, right? Because we want to see how strong this low is when we get our inversion and our advanced market structure shift, and we have the right higher time frame bias, and it happens during a micro. How strong is that low or that swing high, right? So today we're primarily working on taking partials along the way. That's what we're experimenting with. Taking partials along the way of the trade. How can we do that? What can we aim for? And the process I'm using is first target's going to be 1 to 1. Okay. Second target is going to be a high or a low. Okay. Which the high would be here. And then third target is going to be a 2 to 1. Okay, so we hit our first target. Did we get off the board? For some reason it's not. I don't know what's up with this thing, man. It's just not lagging. So we hit our first target, right? Now, hypothetically speaking, okay, so it filled right there. Good. So hypothetically speaking, our stop is now at break even. It's a free trade. Okay, this is I don't know if it's high resistant because we didn't take much drawdown, right? So target one hit. Let's put that in. Hit. Next, we're aiming for these highs. Okay, now one thing I would also advise is see where our 2 to 1 is. Another thing I would advise is sometimes to aim for the candle body high or low instead of the wick because sometimes it will shortchange you. That happens sometimes. But in this case, we'll leave it at the high. This looks like it's starting to move in our direction now. Our stop is at break even. Hypothetically speaking, boom, we hit our second target. The second target smashed. And we're going even further, man. 2 to 1. Do we hit our 2 to 1? Yes, we do. And actually, we're going to leave this as a runner, right? We had 3 contracts on. Let's get this one off. We're going to leave this as a runner and see what happens. We hit a 2 to 1 already. Let's see if it can get to a 3 to 1. Okay. Target 1 hit. Target 2 was hit, which was roughly around here. And now we're just leaving on a runner. It's a free trade. We bring this up to break even, right? Now we don't need to do the hypothetical. Would be the sound thing to do. We don't really have anything to play off the left. Or what we can do is we bring it to our target 1, right? We bring our stop to our target 1. We're in profit with our last contract on. Let's see if it can run above. So once again, at the 950 or the 1050 1110 macro, we get an inversion, we get an advanced market structure shift. Okay, we get our entry at the advanced market structure shift, which is essentially where the inversion occurred, right here. Okay, we put 3 contracts on, ideally put 3 micros. We put our stop at the swing low. It would have worked out if we put it just below the inversion in this case, right? Could have had a 16-point stop. It would have worked very well. Okay, we hit our first target in a 1 to 1 risk to reward. So we'll put target 1, 1, 2, 1. Target 2 is the high. High of the range. We'll put high of range. Whore. It's the whore. Alright, and then last we leave a runner. So we pretty much can take this off and we leave the last one as a runner. Okay, but we move our stop up to the first target. But actually, a good idea would be to leave this risk to reward on because you can move that stop as you go, right? So, what would hypothetically be our next target? Modify if, let's say, a 3 to 1, right? So, if we hit that 3 to 1, we'll bring our stop to the second target. But for now, we'll bring it here. Or what you can do, you can follow the gaps, the fair value gaps. We could move it right here, right? Or into the most recent fair value gap, okay? And we could put it right there. Okay, but this is not about, we're not playing it safe here. We're just experimenting. We'll keep it at target 1. If we hit 3 to 1 risk to reward, then we'll move it to target 2. Now, higher time frame, 15 minutes. That's why I said it was a neutral day, right? Buys and sells. Sold one down here for a killing, bought one going back up. I was neutral on the higher time frame. So let's write out our parameters real quick. One higher time frame neutral. Two, oops, get that up. Two, we get an inversion. Three, we get our advanced market structure shift. Put that in blue. 4, stop at swing low. 5, take profit 1 to 1 or more. Now, obviously, in this, we're experimenting and we're taking partials along the way. Like I said, start off with 3 contracts with the micros, ideally, unless you got that type of capital to be messing around with minis. Okay, so that's our parameters. Remember, on the 15-minute, or sorry, not that, 15. We inverted this bearish fair value gap right here. If we zoom in, this 15-minute candle inverted this bearish fair value gap. Volume imbalance right there gets closed on. And as we're doing that, we get our signal right here. Boom. Happens during the 10:50, 11:10 macro. As you see, 10:44, it's kind of developed. It's there. Usually get to the board at, like, if it's the 9:50, 10:10 macro, get on at 9:45. If it's 10:50, 11:10, you get on at 10:45 because the setup, a lot of times it'll set up at that 45 minute, somewhere around 40 to 45, and then it will come down at 10:50 roughly here. As you see, 10:50, it came down, tapped you in, and boom, you got a nice move. Plus, this was in silver bullet hour, so I jumped in it a little bit early. As soon as we closed, I just put my limit order right here. This is where I got filled. Okay, we got 3 contracts. You can keep a tighter stop if you want to play it safe. Okay, below the inversion, 15-point stop. Okay, we're going to aim for a 1-to-1 target where we take our first partial. We hit that. We took one off the board. Our second target is going to be the high of the range. We kill that, or the whore of the range. And now we're just letting one run, right? When we have our stop moved up to target 1, once we hit target 2. Once we hit target 1, our stop was at break even. Okay, we hit target 2, we go to target 1. Okay, if we hit target 3, which would be a 3-to-1 risk to reward, then we move our stop up again, but it's still keeping us in the trade. Target 3, So that's the way I like to see. Let me fix this real quick. That's bothering me. So I like to have risk to reward and range highs and lows as my target hit. So 1 to 1 was hit. The high of the range hit. Now we got target 3, which is a 3 to 1 risk to reward. If that hits, we move our stop up to target 2. See if I get on my TikTok, man. Start streaming this. Alright, I'm gonna mute the mic, you guys. I got a cough. Alright, trade still moving in our direction. Alright, I'm probably gonna have to skip out on streaming this live. No biggie. As always, tomorrow, right? If this stream closes on us, obviously, you know it's March 14th, and you can see what happened ultimately in the end by going back in your charts. But hopefully, we hit target 3. If we hit target 3, we move our stop up to target 2, and yeah, you get the idea. You get the gist of the trade, which played out very nicely. This thing just wants to move slow at this point. Move this over here. I guess it looks better over here. Hopefully get some movement. Target 2. Alright. And let me see if I can get my YouTube. Nah, it's not going to be on this browser. Put all Mozilla. See. Yeah, I'm gonna start live streaming eventually, you guys. I just gotta figure that out, and right now I probably don't have everything set up. Looks like we might come down and hit our stop. No biggie. That's a $805 profit and more. So there you go. Successful trade that played out. One contract out 1 to 1, second contract at the high of the range, and then you had one runner that pretty much came back down to hit the 1 to 1. And this still may go higher if you keep your stop down here. But that was the point I wanted to show you guys, is the power of when you get these signals of the swing low you have. And a lot of people are bothered by having a 35-point stop, but the beauty of it is, if you're confident in your higher time frame analysis and you get this signal during the right time, uh it's killer, man. It's killer. And you can tighten the stop if you want. You could keep a tighter one just below the inversion. I would advise would be a consistent way you can do it without getting stopped out too much. And yeah, then your risk reward really gets ridiculous. But even this was a nice. This offered you almost 100 points. It was a 2 to 1 at the very least. So very nice trade. Offered you 72 points if you just played it to the high. Yeah, man. Awesome stuff. So that is it for the week. I hope you guys got something out of this. Remember, you can go back to your charts, see how far up this goes if you kept your stop at the swing low. How that would have went. This is HB Punch and Profit. Comment down below, like the video, subscribe if you're new. Peace.